Hello everyone, it's Madstar Investing here, back again with another video. Today it's Friday the 19th of July, and today we'll be learning about a new option strategy. Today's strategy would be the long vertical spread. This is our first strategy and I'll be explaining you how it works and how to actually apply. So let's get in it. So what are the advantages of long vertical spreads? Unlike naked calls or puts, the long or short vertical spreads do not have a problem with time decay, and they have less risk than naked calls and puts. The disadvantages are that they have limited profit potential than naked calls or puts. So what exactly is a vertical spread or long vertical spread? So it's basically a combination of buying a call and selling a call. And what you do is you buy a call which is in the money. So let's just look at this example here. Let's example a stock is trading at $77.50 and you're bullish about the stock and you think that the stock will rise in price. So what you want to do is you want to buy an in the money strike call of $7.50 and you want to sell the 80 call, which costs $2.50. And since when you buy an option, you have to buy 100 shares, you have to times $7.50 by 100, which equals 750, and $2.50 by 100, which is $250. And that makes your net credit $500. You have to pay $500 for this trade because when you're selling a call, you're receiving that amount in advance. So you receive $250, and the stock trades under $80, you keep that till the expiration date. So now let's imagine one scenario and compare the vertical spread to a single option, like a long 70 call. So let's say we bought the 70 call for $7.50, and now that the stock price is trading at $79.50, the call is worth $9.50, which makes you have a $2 profit in each share. And since your option contract consists of 100 shares, that makes it $200. And then you also had a short 80 call, and that because it remained under $80, the stock price, you will get your $250 back in the expiration date. And if you add them together, you make $450 from the $500 you put in, which is a 90% return. Now let's compare that to a single option. So you bought that 70 call for $7.50 on a certain date, and on the expiration date, that was worth $9.50. Now that's a $2.50 profit. And sorry, that's a $2 profit. So since you have 100 shares again, that makes it $200, and you have to actually put in this more risk because you have to put $750 to do this trade, and that makes only a 26.67% return. The reason why the risk was more was because if the option goes under 70, if the stock price goes under 70, then your option will expire worthless and you will lose all your $750. But that did not happen. So now let's move on to scenario 2. So now let's say that the stock didn't go up or it didn't go down, it just traded sideways. Now on your vertical spread, your short 80 call will result profitable because it stayed under $80. So you will get $2.50 from that times by 100, which is $250. Now your long 70 call, which you purchased for $7.50, is now only worth $5. So now if you minus $7.50 by $5, that is $2.50, and multiply that by 100, that's negative $250 you lost. So when that balances out, that makes a $0 profit, which equals a 0% return. Now let's compare that to a single option. We bought the long 70 call for again $7.50, which is now worth $5, and now you actually lose 33% because you lost $2.50 for each share, multiplied by 100, which is $2.50, and 250 is 33% out of 750. So time decay was not an issue for the vertical spread. And now let's go to scenario 3. Let's say that you thought you were bullish on the stock, but the stock completely went the other direction. Let's say it went to $50. So now your long 70 call is out of the money. It expires worthless since your stock trades under $70, and that's why it's worth 0, which makes you lose $7.50 per share. Multiply that by 100 since the option contract is 100 shares, which equals $750. Now your short 80 call was profitable because your stock stayed under $80. So therefore you'll get $250, or actually you'll keep your $250, which makes a net profit of negative $500, which is 100% loss since you put in $500 for this trade. Now let's compare that to a single option. It's basically the same thing. You lose $750 on your call, but this time you don't have any coverage of that short 80 call, therefore you lose $750. So that was it, guys, and as you can see, in all three scenarios the long vertical spread was profitable. This would also work if you were bearish on a stock, and then you could have a short vertical spread just the other way. Now let's see how we actually do this in my trading platform, which is TD Ameritrade or Thinkorswim. So here I found the Snapchat stock, which is trading at $14.22, and I am right now bullish about the stock. Looking at this pattern, Snapchat's been recovering over the start of this year actually. So I'm bullish about the stock, and now I want to trade a long vertical spread. So how am I going to do that? I'm going to go to this trade tab here, and I'm going to see these all options chains, and let's say for 26th of July I will open this, and now we think, since Snapchat is trading at $14.20, we think that it will go above $14.50. So what you want to do is click on this, right click it and do buy, and go and click on vertical, and then this trade tab will open. For now you just want to open one, and here you want to actually sell the call, and here you want to buy the call. So that is actually perfect. And we can make this day order good till cancel as well. And so you're buying a call and you're selling a call, and the $14.50 is at a slightly lower price. So the $15 call you want to sell is actually, you want it to stay also under $15, which I think is reasonably possible. Also $15.50 would be possible. So let's do it $15 for now, and then you want to do confirm and send, and here you can see your max profit, which will be $31, and your max loss is only $19. So the break even here also shows the break even stock price, So if it goes above $14.69, you will start to actually make money, and the reason for that is because that's because of the price of your call. Because if you're buying an 82 call, then that will cost you 82 euros, since this is for one share 82 cents. So for 100 shares, that will be 82 euros, and your 15 call is for 63 euros, and if you or 63 cents, and if you minus that together, then that would equal 19. That will cost you 19 cents. So you want it to go above. Your call is for $14.50, and you're going to be paying $19 for the actual contract, 19 cents. So you want it to go above $14.69. So that your max profit will be $31, and your max loss will only be $19. So here I can click send. What a really cool thing about the Thinkorswim platform is you can see your trade day by day, and here is this pink line, which is of today, the stock price if it's in the x-axis, and as you can see on my cursor, it tells the y value about how much money you'll get, and this blue line here explains the expiration date, so which will be 28th of July, and it explains how much money you'll earn if the stock price trades in this X value. So let's say of today the Snapchat stock price is trading at $14.30, and that will make us just about $0 on our trade. And if you go in 1 week time, that will make us a loss of $20. So we do have to make it go at least to our break-even price, which was around this mark here, 1470s, and here then we'll be getting around, or no, this is our break-even price, 1470, yeah, and that will make us get $0. And if you see the price rise to $15 or above, we'll be making our max profit, which is $30. And if it goes to $14.50, then we make a loss of $20. So since we're so bullish in the stock, we know that it's gonna increase. And as you can see, if you keep on going to the right side, it's not gonna make a big difference. Even if you go to $16.30, it will still make us a profit of $30. And that's about it, guys. Here you can see everything, and I hope you guys enjoyed this video, and I hope you guys understand the benefits of this strategy, and I hope you guys liked it. If you guys have any questions, please let me know down in the comments below. Make sure to subscribe to my channel, and I will see you guys next time.